Assalamualaikum to Madam Shahrina. First of all, let me introduce myself. My name is Atikah and my other three group members, which are Shazleen, Syazrie and Aliff, will present about Brunei Darussalam currency and its economy development. Brunei is located in Southeast Asia on the northwestern coast of Borneo Island. Brunei has a rich history that dates back to the 7th century when it became an important trading center in Southeast Asia. During the 15th and 16th centuries, the Brunei Sultanate reached its golden age and controlled large part of Borneo and the southern Philippines. However, its influence declined during the 19th century and Brunei became a British protectorate in 1888. A major turning point occurred in 1929 with the discovery of crude oil at the Syazrie oil field, which transformed Brunei into an oil-based economy. On 1st January 1984, Brunei gained full independence and His Majesty Sultan Haji Hassan al-Bolkiah served as both the head of state and the Prime Minister since then. Although crude oil and natural gas remain the backbone of Brunei's economy, the government recognized the importance of reducing its dependence on hydrocarbon resources. To support long-term economic resilience, Wawasan Brunei 2035 was introduced as a comprehensive national development strategy. Geographically, Brunei shares its land border with the Malaysian state of Sarawak and faces the South China Sea. The country is divided into 4 districts: Brunei Muara, Belait, Tutong and Temburong. Its total land area is approximately 5,765 square meters. Bandar Seri Begawan, located in Brunei Muara, serves as the capital city and the center of government, finance and commerce. In contrast, Belait is the largest district and serves as the core of Brunei oil and natural gas industry. The district includes the Syazrie oil field, which has played a significant role in supporting the nation's economic development. Brunei's strategic location within the Asian region also supports trade, investment and regional economic cooperation. Consequently, Brunei's geographical position remains an important factor in promoting sustainable economic growth and maintaining its reputation as one of the most stable economies in Southeast Asia. Main event affected the country. Firstly, the COVID-19 pandemic. The pandemic has affected sectors such as tourism, transportation, retail and hospitality. The government introduced wage subsidies and financial assistance to help business and individuals. These measures supported economic recovery and maintained stability. Next, oil and gas price fluctuations. Brunei's economy depends heavily on crude oil and liquefied natural gas exports. Changes in global oil and gas price directly affect government revenue and economic growth. This is why economic diversification is important for the country. Then, Brunei took initiative by implementing Wawasan Brunei 2035 as its long-term national development strategy to build a diversified and sustainable economy. The government is developing non-oil sectors such as halal manufacturing, tourism, logistics, the digital economy and Islamic finance. This initiative aims to create jobs and attract foreign investment. Brunei has shown positive signs of economic recovery after the pandemic. Stronger domestic activity, government investment, and the stable performance of the oil and gas sector has supported this recovery. With continuous diversification under Wawasan Brunei 2035, Brunei is expected to achieve sustainable growth and maintain economic stability in the future.
Now, I would like to share about the comparative advantage of Brunei Darussalam. Firstly, Brunei has abundant natural resources, particularly crude oil and natural gas reserve. These resources are the backbone of the country's economy and contribute significantly to government revenue and export earnings. Secondly, Brunei enjoys a high level of political stability under the leadership of Sultan Hassan al-Bolkiah. This stable environment increases investor confidence and supports long-term economic growth. Thirdly, Brunei maintains a strong fiscal position with high government revenue, low public debt, and substantial financial reserve accumulated from the oil and gas sector. In addition, Brunei's strategic location in South Asia provides easy access to ASEAN countries and major ASEAN markets such as China, Japan, and South Korea. Finally, Brunei offers an investor-friendly tax system with no personal income tax and relatively low corporate taxes, making it attractive for foreign direct investment. Now, we talk about Brunei major export and import. Brunei exports are dominated by energy-related products including crude oil, liquefied natural gas or LNG, refined petroleum products, methanol and urea fertilizer. The oil and gas sector contribute more than 90% of Brunei's export earnings, making it the country's most important industry. On the other hand, Brunei imports a wide range of goods to meet domestic demand due to its relatively small manufacturing sector. Major imports include machinery and industrial equipment, electrical and electronic products, food and beverage, motor vehicles, pharmaceutical and medical equipment, as well as manufactured consumer goods. This trade structure reflects Brunei's dependence on natural resources, exports and import manufactured products. I am going to share about the Brunei's principal trading partners. Brunei's largest export market are Australia, China and Japan, which mainly import crude oil, LNG and petroleum products from Brunei. Meanwhile, Brunei's major import suppliers are Malaysia, Singapore and China, providing essential goods such as product food, machinery, electronics, chemicals and consumer goods. The table on the right summarizes the main product traded with each partner country. Overall, Brunei records a trade surplus with most of its trading partners due to strong oil and gas export. However, Brunei experienced a trade deficit with Malaysia because it imports a large amount of food products and consumer goods from its neighboring country.
Assalamualaikum. My name is Muhammad Syazrie bin Azmi. So I will be present about type of foreign investment. We have two type foreign investment. First, foreign direct investment. Second, foreign portfolio investment. So now we go through to foreign direct investment. It's a long-term investment where foreign company establish or expand business in Brunei. Investors have some ownership and control over the business. FDI, foreign direct investment, bring capital, technology, skill and employment opportunity, helping Brunei diversify its economy beyond the oil and gas sector. For example, a Japanese company investing Brunei dollar 50 million to build a food processing factory in Brunei is considered FDI because it own and operate the business. So now we move to foreign portfolio investment or FPI. FPI involve foreign investor purchasing financial assets such as stock and bond without controlling the company. The main goal is to earn financial return through dividend, interest, or capital gain. FPI have increased capital inflow and improve the liquidity of Brunei's financial market, but it is generally a short-term investment and can be withdrawn more easily than FDI. So now we have a trend in currency. Brunei's currency is the Brunei dollar or BND, and it has remained stable because it is pegged at 1-to-1 exchange rate with Singapore dollar under the currency interchangeability agreement signed in 1967. This means that one Brunei dollar is always equal to one Singapore dollar, and both currency can be used in Brunei and Singapore. Because of this fixed exchange rate, the Brunei dollar is experienced very little fluctuation. This help maintain price stability, support trade and business activity, and increase investor confidence. The Brunei Darussalam Central Bank (BDCB) continue to maintain this exchange rate policy to provide a stable financial environment for business and consumer. Now we move to trend in regulation. Brunei Darussalam is continuously improving its financial regulation to build a stable, secure and modern financial system. First, the Brunei Darussalam Central Bank (BDCB) has strengthened banking regulation by requiring banks to maintain sufficient capital and liquidity, helping to ensure financial stability. Second, the government is promoting digital financial service through initiatives such as the National QR Code Standard and Blockchain Technology Guideline to support a safe, efficient and cashless economy. Brunei has also increased its focus on cybersecurity, anti-money laundering and counter-terrorism financing by requiring financial institutions to strengthen cyber risk management and comply with international standards. In addition, the Personal Data Protection Order 2025 was introduced to protect customer personal information and improve confidence in digital financial service. Overall, this regulatory development have strengthened Brunei's financial sector, attract foreign investment and support sustainable economic growth. And last from me is a trend, political risk. Brunei Darussalam has low political risk because it has a stable government, strong leadership and a peaceful political environment. This stability gives confidence to both local and foreign investors, making Brunei an attractive place to invest. The government also support long-term economic development through Wawasan Brunei 2035, which aim to diversify the economy and improve the business environment. However, one challenge is the Brunei's economy still relies heavily on oil and gas export. As a result, change in global energy price can affect the country's economy. Overall, Brunei political stability and long-term development plan have created a favorable environment for investment, sustainable economic growth.
Assalamualaikum, my name is Noor Hazim and I will be discussing the factor that affects the Brunei dollar movement. This graph shows the movement of the Brunei dollar against the US dollar from July 2025 to July 2026. The exchange rate reached its lowest point of approximately 0.765 USD per Brunei dollar in December 2025 due to the strong US dollar. It then appreciated to around 0.79 USD per Brunei dollar in February and March 2026 before declining slightly towards July 2026. Overall, the Brunei dollar remained relatively stable because it is pegged to the Singapore dollar. The first factor affecting the Brunei dollar during the past fiscal year was the strength of the US dollar and the Federal Reserve's interest rate policy. Throughout March of 2025, the Federal Reserve maintained relatively high interest rates to control inflation. Higher interest rates attracted foreign investors to hold US dollar assets because they offered better returns. This increased demand for the US dollar, causing it to strengthen against many currencies worldwide. Since the Brunei dollar is pegged 1-to-1 with the Singapore dollar, any weakening of the Singapore dollar against the US dollar was automatically reflected in the Brunei dollar. As a result, the Brunei dollar depreciated slightly against the US dollar during the second half of 2025, particularly around December. Although the Brunei dollar weakened against the US dollar, its overall stability was maintained because of its fixed exchange rate arrangement with the Singapore dollar. The second factor is Singapore's monetary policy. Unlike most central banks, the Monetary Authority of Singapore, or MAS, manage inflation through the exchange rate instead of using interest rates. Since the Brunei dollar is permanently pegged to the Singapore dollar under the Currency Interchangeability Agreement, the value of Brunei dollar moves together with the Singapore dollar. During 2025, MAS maintained its exchange rate policy while closely monitoring inflation and global economic uncertainty. This helped keep the Singapore dollar relatively stable, which in turn supported the stability of the Brunei dollar. Therefore, although the Brunei dollar experienced some fluctuations against the US dollar, it remained much less volatile than many other regional currencies because of Singapore's strong and credible monetary policy. The third factor affecting the Brunei dollar was the movement of global oil and liquefied natural gas, or LNG, prices. The Brunei's economy relies heavily on oil and LNG exports, which contribute a large share of the country's export earnings and government revenue. During the past fiscal year, global oil prices fluctuated due to slow economic growth, changes in global energy demand, and geopolitical tensions. Lower energy prices reduced Brunei's export revenue and foreign exchange earnings, which could have placed downward pressure on Brunei dollar. However, the impact on the exchange rate remained limited because the Brunei dollar is pegged to the Singapore dollar. This exchange rate arrangement, together with Brunei's strong fiscal reserves, helped maintain confidence in the currency despite changes in global.
In conclusion, the Brunei dollar, or BND, remains one of the most stable currencies in South Asia. Its stability is supported by the currency interchangeability agreements with Singapore, which allows the Brunei dollar and Singapore dollar to be exchanged at a 1-to-1 rate. In addition, Brunei benefits from a strong and gas sector as well as political and economic stability. However, the country also faces several challenges, including its heavy dependence on oil and gases revenue and fluctuation in global energy prices. Looking ahead, Brunei aims to diversify its economy under Wawasan Brunei 2025 by strengthening non-oil sector and attracting more foreign investment. Overall, Brunei's long-term economic prospects remain positive if diversification efforts continue successfully.